Hey guys, Sean Pruitt here. Right now, WTI crude is trading at $112.70 per barrel. Brent crude $112.80. And so there's a lot of talk about recession coming down the road, and demand is going to be affected, oil demand. And anyways, people are saying a lot of things, but what's actually true is something different. I want to watch Jeff Curry here from Goldman Sachs gives a breakdown as to why he believes we will have $125 oil.
We always look at gas prices overall, and also talk natural gas, Jeff. But I do wonder, any forecast at all for demand destruction given that price I just quoted?
No evidence whatsoever of it occurring yet. And I think one of the key points is, people are worried about a recession. China is in a recession with all the lockdowns, which is creating a lot of slack in the system. So I like to point out, you're at $112 a barrel right now with China still under lockdowns. What happens when China comes out of lockdowns and takes that slack out of the system? There's a lot of upside going into the second half of this year.
Yeah. All right. Well, you gave me a good question. So what happens, Jeff, when China actually reopens and gets its economy fully functioning again?
Well, let's kind of go over the fundamental story that creates that upside, and then I do want to tone down or tame some of the bullishness because the geopolitical picture has softened somewhat. So the fundamental story is you got China, one foot on the brake, the other one on the accelerator. Which means as soon as they take their foot out of the brake, the acceleration is going to be significant. At its peak, global oil demand contracted by 2.5% based upon those lockdowns in China. It's down probably about 1 to 1.5 right now, which means, as they take their foot off that brake, demand's going to pop. At the same time, you have a seasonal increase of 3 to 4 million barrels per day. So a lot of momentum in oil demand on a global basis. At the exact same time, U.S. and the West go on holiday, which will just, exacerbate the situation. And then with Russia,
So what Jeff Curry is saying is that when China's lockdown ends, that's going to add an additional 1.5 million barrel a day demand. And we are going into the season of driving. It's almost summertime here. And that's an additional 3.5 million barrels a day. So we're looking at about a 5 million barrel a day increase in demand when the China lockdowns end and when this seasonal change moving forward. Okay. And what he was about to say in the next segment here, he's going to talk about what's happening in Russia. He lowered his case from $150 oil down to $125 due to the sanctions taking much longer. They are still waiting on a few things. Now, I'm going to look at this awesome article here. Oil prices may not drop even if there is a recession. A growing number of economists are warning that a recession could be on the horizon. A recession will surely impact oil demand, but it could just weaken its growth, not lead to an annual decline in global demand. For oil demand to actually contract, a recession has to be severe, and the Fed is optimistic that the U.S. will have a soft landing. And so there's many analysts, there's a lots of talks of recession, okay? Now, the growth of oil will be dampened, but at the end of the day, you cannot stop the demand of oil. It is growing exponentially. You think of every single electronic device, every single car, everything that is developed, it needs oil. And the demand for oil continues to grow. It's a problem. It is a major issue. It's something that you should fear, is this energy that we found underneath the ground sent us light years ahead of where we were. And we have lost sight of that. We have lost respect for oil. And so everybody thinks that we could just replace energy. You don't just replace something, a non-renewable resource. All we do is extract it from the ground and we burn it. We don't respect it. And so that growth will continue. And as far as demand, and there's nothing we can do to stop it. The only way we can stop the demand of oil is unless we shut down our economies. During COVID, we lost about 10 million barrel a day demand globally. And so what did OPEC do? They offset it. They reduced their output by 10 million barrels a day. So as long as OPEC continues to offset that, as long as Russia is on the chopping block, China is coming out of their COVID lockdowns. And here's the deal. We have yet to reach our full potential as far as demand because we are still coming out of the COVID lockdowns. So although we might be going into recession, you might not even notice it because if you get rid of the lockdowns, you get rid of the lockdowns in China, I mean, we're going to be back to where we were before at a recession. And what difference does it make? It's all a wash. Oil markets are bracing for a slew of bullish news. Okay. And so oil prices climbed higher this week as the gradual easing of Chinese lockdown rules rekindled hopes that East Asian buying will see strong growth over the summer months. While the European Union is still yet to formalize an agreement on Russian oil and products sanctions. The deal now apparently hinges on just one country, Hungary. Okay, and so we're waiting on Hungary. Before it was Germany, and now it's Hungary. But once they decide on the matter, the sanctions will move forward. Recording a 5 million barrel week-on-week drop in the week ending May 13th, falling to a total of 538 million barrels. The amount of crude stored in U.S. strategic petroleum reserves has fallen to its lowest in 35 years. So the strategic petroleum reserves is the lowest since 1987. Okay, that means we're burning more oil than we are producing, and that's a problem. Russia oil sanctions hinge on Hungary's approval. We already read about that. And so there's a lot of moving parts to all of this. It's not simply, oh, there's a recession coming, now demand's going to drop. Fossil fuels. And so this is a gentleman. He is the general for the United Nations, okay? And look what he has to say about fossil fuels. Fossil fuels are a dead end, and the only sustainable future for the planet is accelerating the energy transition, United Nations Secretary General Antonio Guterres said on Wednesday, launching the State of the Global Climate 2021 report, which showed that 4 key climate change indicators set new records last year. The United Nations presented a 5-point plan to jumpstart the renewable energy revolution, which Guterres says has received a wake-up call following the Russian war in Ukraine and the immediate effects on energy prices. According to the World Meteorological Organization State of the Global Climate 2021 report, 4 key indicators of climate change, greenhouse gas concentration, sea level rise, ocean heat, and ocean acidification set new records in 2021. The key to tackling this crisis is to end our reliance on energy generated from fossil fuels, the main cause of climate change, the United Nations said. And so the United Nations is getting behind renewable energy, okay? And now they're pushing that agenda. Now that is crazy because we've built this world from oil, from fossil fuels. It is a free energy sitting underneath the ground. To capture the sun, to capture the wind, it takes a tremendous amount of infrastructure and a tremendous amount of batteries. What do we do when the wind's not blowing? What do we do when the sun's not shining? We need batteries. Well, there's not enough batteries to store that much electricity. Not only that, we have to produce twice as much electricity, enough to power all of the homes during the day and enough to power and charge the batteries for the nighttime. So we don't even have enough. We're 30 years away from all this happening. And the problem that we have here is that we set fossil fuels aside and we started focusing on green tech. And here we are at $100+ a barrel of oil when oil prices should be around $65, $70 a barrel. If we continue to develop oil and gas, we would not be in this situation. Okay. And so as you can see here, Dow Jones Industrial Average, you see the stock market is taking a 6,000 point drop. Okay. And that's because the feds are increasing the rates here. When the Federal Open Market Committee changes the interest rate, it impacts both the economy and the stock markets because borrowing becomes either more or less expensive for individuals and businesses. Now that's trickling down across the globe. I mean, less people are able to borrow money. They're having to pay back more money, so that gives them less money to invest in their business, to buy more. And that all trickles down and it affects the stock market. And so you're seeing the stock market drop. Now, they truly believe that it's going to be a soft landing. Okay. We're not going to see what we saw in 2008. But here's the deal. When you increase the cost to borrow money and the stock markets fall, now there's going to be less oil and gas development. It increases the cost to drill a well because some of that is borrowed money. And a lot of the money that comes from the stock market is put into oil wells. I mean, Chevron and some of the biggest oil companies in the world, they're publicly traded stock, and they use that money to drill. And we're going to have less money to develop oil and gas, okay? And we're only exacerbating the situation of high oil prices, okay? And so bottom line, when China's recession, I mean, they're lockdowns. I mean, they're in a major recession. That's 1.5 million barrels a day. And then we're going into driving season. That's an additional 2.5 million barrels a day. And then we still have the Ukraine situation and also the Russia is on the chopping block. Okay. Now, a smart guy like Jeff Curry that has Goldman Sachs money behind him is saying that we should be at $125 oil. Okay. I think we are in some interesting times. I don't think there's been a better time to invest in oil and gas. With a lot of people are sitting on their hands. They don't know to buy real estate. They're selling out of real estate because they're selling at the top of the market, and they don't want to buy now because the interest rates have increased and the cost of a home has increased. So they're sitting on a lot of capital. The stock market is taking a huge dive, and they're going to continue to increase rates until they get this inflation under control. As where demand for oil continues to grow, not the growth that we were expecting because of the potential recession, everything that's happened in Ukraine. But anyways, I'm Sean Pruitt, president of Kingdom Exploration. If you like this channel, please subscribe. And if you're interested in learning more about oil well investing, look in the description below. And I'd love to chat with you. Thanks.